Alright guys, welcome back to another video. Quick context for anybody new here. At the start of every week, I call out all of my options and swing trade positionings, and then at the end of the week, I come back and recap exactly how they all played out, and this video is obviously the recap. So we're going to go through what worked, what didn't, and how I'm thinking about these positions moving forward. So jumping into IREN first, this was the biggest position of the week because I had a covered call that was hit along with the cash secured put position as well. So I was running kind of both ways on this one because I wouldn't have minded a bunch more shares at this level, so we could actually eat on that upside even more. Personally, with IREN, the puts expired worthless, which is what I did want. However, I wouldn't have minded owning it at a lower price, considering we also have a bunch of support levels at these lows. The calls, however, did get exercised, meaning all of the shares I had got called away, 300 shares to be exact. So I want to split this into what went right and what could have gone better. So what went right? We got paid on both sides here. You know, for the week alone, I generated $500 in just premiums. The trade still did exactly what it was designed to do. It helped me hit my 1% weekly target, which was great. So I got paid obviously for selling this cash secured put and for selling this covered call. Together, like I said, that made me around $500 just for the week alone. So what did not go perfectly? So from my share price to where I sold IREN at, that is around a 3% stock gain. But IREN in one day managed to pump almost 15%. So I really did cap my gains on this very hard. If I managed to sell a covered call at these highs, I would be eating in premiums this week and I would have a massive stock gain on the shares that I own. So in hindsight, you know, this could have been a massive stock win, but the reality of it is I wasn't positioned for a 15% rip. I was positioned for my consistency and I got paid. The trade did the job, and yes, we left upside on the table, but this trade did its job. I made up for the shortfall I had on IREN from holding these shares for a while now. So I am happy to be out of this trade and I can look at other positions in other stocks. So that is pretty great, but we did really miss out on a lot of upside, as you can see, from the all-time highs all the way down. So moving into this week, we also have monthly covered calls on Palantir and Dell. These are both slow, steady names, and that's exactly why I like them in their current states. We're running monthly covered calls on both of them, and when you break it down weekly, they're actually netting me around 0.5% per week in the premium itself. So there's no drama, there's no chasing this, just clean premiums. I've set the covered call position generally high because I will need a pretty big goal here for the shortfall of how much percentage that I'm targeting on these shares for owning it for so long. But with the premium alone, I have a month for myself to get all the way back into in the money right here above my share price, and then continue to the upside where I could sell an in the money covered call and earn a better premium. So for the time being, I'm still earning 0.5% on the stock that I own here just for doing nothing. Now, again, the same goes for Dell. This one has been the pain in my side for a while now. If you guys have been following along, after reaching this low and creating this support level right here, we did come up and we were above my share price. I believe I did have a covered call at like the 146 mark, which was like right above where we came to, and then we have obviously tumbled all the way back down. So I am looking for Dell to make some sort of recovery in the next few weeks, get in the money where I can sell another covered call, but for the meantime, we are just netting that 0.5% premium every single week, which I'm very, very happy with for shares owned, and that is aside from even running my cash secured puts. Now, getting into the good stuff, let's hop over to Hood, because this was a very interesting play. Hood was more of a tactical assignment on this. I didn't necessarily expect to be assigned. As you can see, we had this massive fall off in price right here. I was completely okay if it happened, and you know, that is obviously the mindset you need to have when you're playing a strategy like this. You know, you can earn your premiums, yes, but overall you do have to be comfortable with getting assigned if that does come to light. We did get assigned at these lows right here, and personally I don't think we're going to be trailing much lower. As you can see, we don't really have any support levels, but you know, for dropping below here, this is like mid 2025 lows, and you know, if that does happen, I think we do have a lot bigger issues to look at right now. But personally, I'm looking for a clean stock gain on this since we own it right at the 110 mark. I think we have a lot of room to the upside, and from where it's currently trading, we're only down just a little bit. But more so what I want is to get back in the money. I can sell a covered call on this, earn a fat premium off obviously being in the money, and then I can go for a couple percent gain on the stock as well. Even if we make it back up to here, that's like a 12% gain. So I'm very, very happy with that if that's what we can do. Get these shares called away at this level, earn a fat premium doing so, and that's it. This one's going to be very well planned, and that's what I'm going to be looking at for the coming weeks ahead. All right, jumping into the next two stocks that were very, very clean wins, I would say. This is going to be DXCM, and then we'll take a look at OKLO. These stocks itself expired worthless. There was no assignment, there was no stress between the two of these premiums alone. one, I netted $300 for the week. I can go into chart details separately, but from an options perspective, these did exactly what they were supposed to do. We were very, very clean away from our strike prices. As you can see, we ended up from all the way up here, all the way down here. So this was a really good pick on DXCM, on OKLO in particular as well. We danced a little bit on the edge here. As you can see, we did recover, which was great. But overall, I was confident with OKLO more because we did have these support levels here and here, and we would be assigned at this level. We would be playing in between two key support zones. So I wasn't too worried about this one in particular, seeing that when we came this close to assignment. Overall, like I said, we earned some great premiums on this for the week. Again, I was playing these on a weekly options basis. So everything I'm talking about is just for the week. And now this brings us to the doozy, which was QCOM. This move was not very clean, and I'll be straight with you guys. Yeah, I did catch a falling knife here, as I mentioned in my last video too, talking about my positioning for the week. Yes, we did earn about $180 in premium just for agreeing to buy this stock, but as you can see, we are about 5% lower from where we got assigned at. We got signed at 167, and we have already fallen down to 159. Price has moved against us pretty harder than I expected in this, and my honest take is that I'm not upset with where I own it at, but there is an upside and support below here. As you can see, we do have a good support zone at this level. We are trading very far under the EMA, so I do expect to see some sort of recovery where I can get a good covered call snuck in there, and then obviously make a good percent gain, maybe at the 173 mark for around an 8% stock gain, and a good covered call premium to sell this for. But overall, we did make an almost 1% week from this, purely just from the premium, even with a capped upside and the trade going against me. But more so, the big takeaways this week were consistency beats perfection. You know, covered calls cap the upside, and that is totally okay if that's in your plan. Not every trade is going to feel good, but the math still works when you push it out over the amount of weeks that you're playing this on. Overall, my portfolio balance matters more than being right. This is just what good, consistent options trading looks like. I'm not taking calls to the moon, leveraging my mom's house on this. So this is exactly the way I like to be trading, and I'm not trying to hit home runs every single week. I'm looking for my clean executions, controlling my risk, and repeatable returns. Some weeks, you know, we were going to miss upside, and that is exactly what happened with IREN, and some weeks you're going to take heat like we did on QCOM. And over time, this approach just keeps you in the game because you want that consistency as your goal. Overall, on the week, we ended with around $980 in premiums alone, essentially almost $1,000 week just on premiums without stock gain or anything aside. So this is a really good week for me, you know, in a such thing where I'm not really taking any swing trades right now. Just earning $1,000 for the week for almost doing nothing is really, really great, and I'm happy with that. And you know, consistency beats perfect trading every single time. I will make another video tomorrow once I've set up my positions for the coming week, January 19th starting, and I'll post that video so you guys can see exactly what I'm looking at, some new trades that I'll be taking, and how I'm approaching some of these doozy trades, especially like QCOM. If you guys have any questions, make sure to leave them in the comment section below. If you found value in this, leave a like and subscribe. And with that, we'll see you guys in the next one.